Some of the most popular retailers in the United States are reducing their physical footprint right now as consumers batten down the hatches amid inflation and tighter credit conditions. Rising real estate costs, higher wages, and increasing expenses are leaving even the best performing chains afraid of what can happen to their balance sheets in 2024. Brands are currently observing industry-wide trends that suggest a tough period for businesses is ahead. That's why they're preparing accordingly by taking steps to eliminate underperforming locations and to cut costs before sales drop even further. There's also a major shift towards online shopping that's rapidly changing the American retail landscape. As more shutdowns are reported each week, your local retailer may stop serving your community before you even notice. For that reason, we've compiled the latest store closing announcements in the retail industry. Here are 15 retail stores going out of business right now. 1. Office Depot. About 71 Office Depot stores are conducting their final sales right now. This week, one Chicago location already closed doors at Hyde Park Shopping Center as the retailer started moving away from shopping malls. The announcements about the new closings came after the company reported in its most recent financial results that its retail division sales were down 11% in the past quarter compared to last year. A spokesman for the company said that the closings are part of Office Depot's nationwide plan to optimize its retail footprint, shifting focus away from its physical stores to online sales, to IT services, and business-to-business solutions. In 2020, the retail chain also said that more than 13,100 jobs would be cut by the end of 2023. Since then, 327 locations have gone out of business in the United States. 2. Champs Sports. Foot Locker is taking steps to close 400 low-performing stores in 2024, including 125 of its Champs Sports locations, officials announced Monday. The news came as a shock for the industry and has made customers curious as to why is this retail giant taking such a step right now. During its latest meeting with investors, Foot Locker executives said that the Champs Sports stores set to close will mostly be underperforming mall locations. However, they represent about 10% of the sneaker chain's total sales, and that may ultimately hurt the company's bottom line over the next few quarters. 3. Whole Foods. Amazon's grocery business is not performing well in 2023, but since 2021, several Whole Foods markets have been struggling to stay in business, with more than 71 closings happening between April 2021 and August 2023. Now, the world's largest online retailer is thinning the herd once again. 9 stores are about to cease operations as the company reevaluates its portfolio, CEO Andy Jassy said. The markets that are closing down are located in Montgomery and Mobile, Alabama, Houston, Texas, Tarzana and San Francisco, California, Brookline, Massachusetts, Clayton, and the Englewood and DePaul neighborhoods in Chicago, Illinois. 4. Sprouts Farmers Market. Sprouts Farmers Market has been one of the fastest growing retail chains in the U.S. in recent years, adding 30 locations to its store count in 2023. However, not all stores that opened in the past couple of years have succeeded in the U.S. market, and now the grocery retailer is getting rid of locations that are underperforming financially, according to a press release. Executives said the closures would mostly impact larger format Sprouts stores as the chain transitions to smaller, more productive models. The company just revealed that stores on the chopping block were located in Texas, California, Georgia, Florida, and Washington, but did not provide specifics about how many stores will be impacted just yet. 5. Amazon Go. The biggest online retailer in the world continues to reduce its retail footprint amid falling sales. Amazon announced this month it would close over a dozen Amazon Go brick-and-mortar stores, including 2 in New York and 4 in San Francisco. San Francisco Business Times reported that the company is exiting the city's downtown after more than 4 years in business. The decision came as CEO Andy Jassy continued his cost-cutting campaign to reorganize Amazon's finances and focus on more profitable projects. 6. Stop and Shop. Northeast regional grocery retailer Stop and Shop is now closing locations that have been underperforming relative to financial expectation, a company spokesperson told Best Life. So far this year, the grocer already shuttered multiple stores in New Jersey and New York, citing profitability issues. Since 2020, the chain has been struggling with higher costs and falling revenue, leading executives to reassess the company's brick-and-mortar operations and make some tough choices. 7. Walgreens. Popular pharmacy chain Walgreens plans to close 450 locations, CFO James Cahoy said in the company's earnings call this week. At least 150 of those will be in the United States, as the company takes immediate actions to optimize profitability for our U.S. healthcare segment, Cahoy said. The shutdowns are expected to save the company $4.1 billion by 2027, according to the executive. The move to reduce Walgreens' brick-and-mortar footprint is to accelerate the company's portfolio optimization to further simplify the business, he explained, adding that the ultimate goal is to optimize the model through our micro-fulfillment centers, tech-enabled centralization of in-store activities, and telepharmacy solutions. About 500 roles will be cut as a result. 8. Old Navy. Parent company Gap Inc. said it would shut 75 Old Navy stores as the struggling apparel retailer takes steps to revive its business in international markets. Compared to overseas markets, sales are down 6.6% at $3.44 billion, it reported last month. Up to Thursday's close of $13.17, the stock had fallen about 40% this year. Old Navy is always evaluating its real estate portfolio to ensure a healthy fleet of stores that can provide the best possible experience for our customers, said Gap Inc. Details about the closings haven't been shared with the public just yet, but on November the 16th, the company will provide more information during its quarterly earnings call with investors. 9. Lidl. German discount grocer Lidl entered the U.S. market in 2017, but since then, the chain has been closing more locations than opening each year. Competition with Aldi and dollar stores has been increasing lately, with rivals expanding their operations while Lidl continues to lag. According to the Daily Mail, Lidl just announced closings in North Carolina, Virginia, New Jersey, South Carolina, Maryland, and Pennsylvania. After a thorough review of the performance of our store network, we made the difficult decision to close a number of stores, spokeswoman Chandler Spivey said. These were underperforming locations, and we made the strategic decision to close these stores so we can focus on the locations that are closer and more convenient to more of our customers and where we are seeing significant growth, he explained. 10. American Eagle. American Eagle Outfitter CFO Mike Mathias has told investors that the apparel retailer is looking to close 200 to 250 locations, mostly mall-based, during the next 2 to 3 years. As many as 225 stores would be closed by early 2024, he said. Today, there are 880 American Eagle locations around the U.S., but the company said it ultimately wants to bring that count to about 400 before 2030 as it expands its online business. 11. Aeropostale. Like teen clothing competitor American Eagle, Aeropostale is falling on hard times again. In 2016, it first filed for Chapter 11 after losing money for 13 consecutive quarters. Back then, it closed down 154 of its approximately 800 locations. Now, 5 years after declaring bankruptcy, parent company ABG has been noticing that foot traffic continues to decline at physical stores. That's why it has started to focus on the brand's online operations and said it would reduce Aeropostale's store network by 11% in the US. 12. Target. More Target stores are going out of business as the company faces its deepest crisis ever. In the first week of September, the Minnesota-based chain announced that it would close 9 locations due to theft and inventory losses. By the end of October, that number jumped to 11. In this case, we cannot continue operating these stores because theft and organized retail crime are threatening the safety of our team and guests and contributing to unsustainable business performance, Target said in the press release. We know that our stores serve an important role in their communities, but we can only be successful if the working and shopping environment is safe for all. The retail giant said that it doubled down on security to prevent this from happening, using third-party guard services and implementing theft deterrent tools across its business, but also noted that the financial losses were simply too big to keep these locations open. 13. Moose Jaw. Dick's Sporting Goods, which acquired Moose Jaw from Walmart in February 2023, just revealed plans to close all but 3 stores in the outdoor retailer chain. The shutdowns are coming just 6 months after the acquisition. The stores will stop operating in February 2024. The move is part of the parent company's strategy to focus its outdoor business around its public land stores. This move supports our business optimization efforts and will allow us to operate more efficiently, quickly leverage best practices across our outdoor business, and drive our long-term success, Sarah Casella, a spokesperson for Dick's, wrote in a statement to The Daily. 14. Signet. Jewelry chain Signet, which owns Zales, Jared, and Kay Jewelers, announced it would close as many as 150 locations after its comparative sales dropped by 13.9% in the past quarter. On a conference call following the release of its financial results, Signet's Chief Financial, Strategy and Services Officer, Joan Hilson, said it is targeting underperforming stores, mostly in mall locations. Overall, Signet's sales plunged by 9.3% from the same period last year to $1.7 billion. Signet CEO Gina Drosos blamed the drop on macroeconomic headwinds that worsened late in the quarter and an anticipated decline in people getting engaged due to less dating during the pandemic, a trend she expects will reverse itself by next year. 15. Sears. Sears used to be a giant in the department store world. It was the go-to place for everything from clothing to appliances, furniture, and more. In fact, its parent company, Sears Roebuck & Co., was once the world's largest retailer, operating nearly 3,500 stores, Sears and Kmart. In 2018, the retailer filed for bankruptcy, which led its store count to shrink from 700 brick-and-mortar locations to less than 22 when it re-emerged from Chapter 11 in October 2022. Today, only 12 Sears stores remain open, and by early 2024, only 7 will still be in business in the U.S., according to the U.S. Sun. While some brands are closing locations to weather the storm, others are already on their last legs and won't likely survive for another year. Since 2017, the sector has been experiencing a drastic shift in consumption patterns that has pushed brands to differentiate themselves from their competitors and constantly re-evaluate their businesses in order to remain profitable. The pandemic added even more stress to many companies, and the inflation crisis that followed has only made things worse as shoppers started to pull back and sales started to go down. Now, as another recession unfolds, the outlook for the sector is quite gloomy. Retailers have to act now or risk being eviscerated by this downturn in 2024. Thank you for watching.